Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, when we spoke yesterday, we talked about the middle band, whether that could become resistance and what the impact of that could potentially be. We saw a couple of attempts by the bulls yesterday to try to get back over the middle band. The most notable was after the FOMC announcement, but the 72-73 area proved to be too much. Came back below the middle band pretty easily and then continued to make lower highs and lower lows. We've seen some weakness in the overnight. We've done as low as 47s. We're right now sitting 55, so we've been down anywhere from 10 to 18 handles on the Globex in the overnight. The Bollinger Bandwidth this morning has expanded all the way out to 1.59. I'm being very sarcastic here. These bands, objectively, are incredibly tight. And I just got done saying in the room, we just went from 1985 to 1947, so essentially, essentially 40 handles. And all that happened during the course of the 40 handles is the bands, all they did was get tighter. They didn't expand at all. They just got tighter. So when the bands do expand, we're going to see a significant move. Could this be a head fake and we could still go on an upper band ride? Sure, absolutely. The bands are so tight, we could go back up to the upper band again from here. They're just that tight, which is why it's so dangerous to anticipate the resolution of a band ride. But what you can do is basically what I told everybody in my room yesterday. I said, look, you can get short on an overnight basis with a risk marker of middle band. We had that trade out there yesterday at about 5 minutes to 3. So, and that, that's paid off very well for our subscribers. But now what we have to see is, do the bears have more in them? Are we going to start a band ride? If we're going to start a band ride, then we could potentially start a band ride today. This is the first interaction with the lower band that we've had since July the 18th. Now, the last reaction with the lower band was bounced very sharply. That was on Friday, Friday the 18th, and it essentially ground up the entire day. So we'll have to see how the bulls handle the open. Remember, we have the jobs report tomorrow. So there's still a lot of big catalysts out there, but a clue as to whether or not the bears mean business would be to stay underneath the green line, so 67.75, to stay underneath the green line all day long. And at that point, you start to look for morning highs that get sold, and that is what a lower band ride is. Lower band ride are AM highs or morning highs that die. Okay, so you have to start thinking of it that way. But until we get a close above middle band, this will put me and this will put us into sell rallies mode. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'll be back tomorrow morning with another webcast. Don't game the jobs report. I'll talk to you guys after, and we'll see how it came out. Trade them well.